Good afternoon, guys. My name is Robert Paul. Yeah, so today I'll be talking about the market in general. The market in general, what is the market all about in general? Um, you know, the market is very dynamic, and I mean, in the sense that it appears very, very different to everybody, and how we see it, how we see the market is very, very important as a trader, whether as a new trader or um, you you have experience already. You one of the things that you must be able to do is your ability to be able to see the market properly, beyond candlesticks, Well, obviously, this is how the market move. We know that this is how the market move, and it's important that we are able to see that the market is really moving in this direction. Okay, and then when it moves in this direction, what does it do? It moves downward in the same direction again. It moves up and down, and it is in between this movement. It is in between these movements, either up or down, that people are making money from. So in the forex market, there is no specific way you can make money from. Okay, why you some what funny thing is that you can make money while somebody is buying, then you are selling, because your own sell might be a retracement inside the buy of the person. Okay, and one of the things I'm going to be introducing us to is the concept of the BFI traders, the concept of the bank and financial institution traders, how they trade this market, how they look at the market. I started trading forex, trading support and resistance, trading candlestick patterns, which were not bad. They helped at a point, but every time you look at the market, you always know and could feel that there could be something different. And let me let you know also that there are some people in the market that barely make losses in the market. And who is better to follow than people who don't make losses in the market? You understand? Because they are the one that are dictating the move of the market. So when it is hard for somebody to mislead you on your way to your house that you have been going to your house for how many years, and then somebody is trying to mislead you in the direction to your house. You just laugh it off like, guy, don't even know what you're talking about. I mean, you think you can mislead me? I have been going to my house. So because they are the one that determines the move in the market. Why? Because they trade volumes. My trading view is not a paid one. This particular one is not paid, but there's an indicator that allows us to see volume. This is the indicator. It's called fixed range volume. When you use it, you can use it to draw it. You can use it to see volumes in the market. Yeah, but I don't think mine can see it because of it's not a subscribed account. Okay, so what am I trying to explain to you is that the bank and financial institutions, BFI traders, are the people that they are the market themselves. They use private brokers. They're not using brokers like our Hot Forex and XNS brokers are Cut for and what again? All those brokers, they are not. They have their own private brokers. They call the trades for themselves. They determine by themselves, and they are as much as they are computerized algorithms into this trading system. Yes, there are also they find ways to find to bring to trade the market. You get what I'm saying? They find ways to trade the market. They find ways to find their interest in the market. So whenever you see, so sometimes whenever you are seeing something like this, you are seeing something like market comes up here, comes down again, comes up here, comes down again. What you call a double bottom or a resistance zone here, they are seeing it differently. You understand? They are seeing it differently. What you see called head and shoulder pattern or inverted head and shoulder pattern, they are seeing it differently. The market comes down again, then goes up, then comes back somewhere around there again, then goes up. Okay, then comes one more time, goes up here, and then before coming down like this again. Now, there is something that they have seen. There's something that they have seen and that they are banking on. So as a trader, you must understand and find a way to see the market differently from the way it is generally. You must be able to see the way the market is generally. You must be able to understand that what is happening here. And one of the things that I'm going to be showing you is about understanding zones, supply and demand zones, understanding BFI footprints, the things that you need to look out for. When you see them in the market, you get ready to take action. There are three steps in trading. There are the analysis side of trading. There is the the book I sent to you, please, you must have seen it there. You must have read, or if you're not done reading, you must have seen some stuff. So you have the analysis side of trading, you have the execution side of trading, and then you have the psychology side of trading. Now, the hardest part is this analyzing part, okay? And the one that determines your profit and loss is the execution part. And what determines that is your psychology. The psychology, after you have done even good analysis, because and you have seen that this thing is going to buy, but because your psychology is still working with with your spirit and with your village people, you can decide to choose a sell for the trade, and then so psychology is has a lot to do. Psychology has a lot to do with your mind, with seeing your trades in red and not panicking, and then seeing your trades in profit and not also rushing to close it, because in your analysis you can foresee that the trade has more potentials to move and to do better. Okay, so the market in general works that way. So you must understand that the analysis part of trading. Okay, you must understand the analysis part of trading. The analysis part of trading. So which is what we are starting with first. We're starting with the analysis part of trading. This is what we'll be starting with first. We're going to start with analysis part of trading. I want you to understand what analysis is, how to analyze your peers, and knowing that it is an important and integral aspect of trading. You must understand analysis. And when you what do we do when we're analyzing our trade? What is analysis? Analysis is a breakdown. You understand? In science, when you're talking about analysis, you're talking about a structural breakdown to understand, before you understand something, you have to break it down properly. And then in Forex, analysis is the breaking down of the chart, to be able to see properly. When you want to repair something, when a mechanic wants to repair a car, or you want to change the tire of your car, first thing you do is to remove the tire, remove the bad tire, and then you take it to fix it. So you have to break the car down, you have to put it on hot, and then put the jack, then remove the tire. If it's something with the hand of the car has to be on the spot. It has to stop. The car to be on the spot. The card must not move, does not have to move because you want to analyze it. So that means that your mind analysis does not involve execution. So don't mix it together. You don't execute and then go to analyze. You analyze first before execution, because execution is the most important part of trading. So you have to understand that what you are doing as a trader is that you are analyzing first. You are trying to understand the condition of the market. You cannot, your analysis is what doctors do when they ask you questions. What are the symptoms you're seeing? What did you eat last? What happened here? What happened here? So analysis is that part that doctors do, trying to understand the health of your body. You understand? They ask you question. So whenever you are involved in this, you open the chart, you are seeing the market. The first thing you want to do is analyze it. The first thing you want to do is understand the market entirely, understand the structure frame of the market. What is happening in the market? Is the market presently on an uptrend, or it's on a downtrend? Is the market ranging, and is it consolidating? Now, this is going to take us to the three parts of analysis that we are going to be talking about today. So I want you to just understand it. All of the things that you know before, that you have been working before, doesn't mean you are not working again, they are good, but I want you to pay attention to these few things that I'm going to be talking about today. And there are the three important parts of analysis. You know, we are coming important parts of analysis. I'm equipping us. I'm sure that by now you guys should have stopped trading at this day, because trading at this time for you is risky. You should wait till supposed to wait till next year, January 9, 10, before you start trading. It's not advisable for you to start trading now. Another part of analysis, you have the trends, consolidation, trends. Another trend, we have uptrend, downtrend, and consolidation. Okay, yeah. So these are important part of analysis. When you open your chart first thing you want to ask yourself is this: what is the market doing at this time? What presently is the market doing? What is the market telling us right now? What can we tell about the market? What can we tell about the market? So when you open your chart, what you ask yourself, what is the trend that is presently happening or that is presently going on in this market? You want to understand what is happening in the market. What is the trend in the market? Is it an uptrend? Yeah.
Quick question.
Okay.
You know, everybody always says that once you open the market, you want to see what the market is doing. Mm-hmm. But don't you guys notice that on every time frame is always different? If I open a 4-hour time frame, if it's different from what I'll see on a daily, it's different from what I'll see on a 5 minutes, it's different from what I'll see on a 15 minutes. Do you understand?
Well, definitely.
Like overall, how would you understand that this currency pair is doing this, that currency pair is doing that?
Well, I was still going to get there, but since you mentioned it, so maybe we can talk about it now. But I will just talk about it briefly, which is the time frame correlation. Okay, as a trader, you don't need a whole time frame. You need just two time frame: macro time frame and a micro time frame. You understand? That means that you must have a time frame where you are looking out for your important zones, and then you have a time frame where you are looking out for entries. Okay, high time frames are for locating your important zone in the market. Then the low time frames are for looking for good entries. And what good entries does for you is that they help you to reduce risk. Okay, that is why you go on small time frame to look for entry, because on high time frame, when you are looking for entries, your stop loss pips might be very large. Okay, so when you get to the market, you already know the 2 time frames you want to work with. Okay, as a trader, the first thing you should check, the first time frame you should check is the monthly time frame. The moment you come to your trade, the first time frame you should check is your monthly time frame. Because your monthly bias means a lot. It is not like you are using it to analyze, except if you are a swing trader. You understand? Except you're a swing trader. But the monthly time frame, yeah, is not for you to it is for you to have the market mindset. What is in the market? What is the market doing at this exact point in time? What is the market doing at this point in time exactly? What exactly is the market doing at this point in time? And that is all you want to do. So when you go to your monthly time frame, just like your place of okay, let's take for example, yeah, when you take your car to the car shop, for the mechanic shop for repair for you, you know, if you didn't take it to a specialist mechanic shop, like say you drive a Benz now, you know, when you go, if it is just a regular general mechanic, when you get there first, the mechanic first responsibility is to look at the model of the car. What is the model of this car? Then when it says that it is Toyota, what year Toyota? Toyota 2010, 2011, 2012, 2014. Oh, okay. What type of this is this and that and that, depending on what is wrong with the car. You understand? So the monthly time frame gives you an overview of the market. You understand? Now, looking at this market now, let's come here. This is a GBP USD pair. Let's go to the monthly time frame. Presently now, what can we say on the monthly time frame that is happening? The monthly time frame is bullish at the moment. Now, the present candle is bullish, but the trend on the monthly time frame is not bullish. The trend is still bearish. Are you getting me? Look at it. Look at what I'm trying to say. This is a place that the market has reacted to here, and then it has reacted to the place, and then it rather started coming down. Now, on the monthly time frame, this bullish movement is just a retracement. This bullish movement is just a retracement of a continuation of a downward trend. So you as a trader, now you understand what is happening already on the monthly time frame, that there is a retracement going on the monthly time frame. You can decide to trade in the retracement. You have it around that the market is overall on a downtrend, but it is presently retracing, so making the month bullish. By January, we might see something else. This is December now. You understand what I'm saying? So when you open your time frame first, that is the first thing you are looking at. Then you can go to your other time frames depending on the time frames that you have chosen for yourself. Depending on the time frame that you have chosen for yourself to work with, you only need just 2 time frames. You get what I'm saying now? You don't need just 2 time frames to work with. Just 2 time frames. Just 2 time frames to work with. Just 2 time frames to work with. The moment you find out 2 time frames to work with, that is all that you are going to be paying attention to the moment you start analysis. Okay? Because and whatever is happening on the higher time, on smart time frame, is happening, is the same that is happening everywhere. It is just that their movement is different, you know. Now, all this long candle that you are seeing now on monthly time frame, that's more one candle we see. These are all the movements that we have seen that it has done. More than this though, starting from here actually, on the monthly time frame, these are all the movements. And this is almost how many pips? 263 pips. Okay. But I'm sure it's going to be more than that. But because you know you're just doing 4 hours, maybe started from somewhere, far. from the back. But let's not go into all of those details now. So the moment you understand, okay, is it what trend? Now we know that that trend is an uptrend. It's not an uptrend. The monthly time frame, the monthly bias on what we just checked now is still a downtrend actually, but there is a retracement. I think we need to add to this that there is a retracement. There is a retracement. You understand? You need to understand the retracement when market is retracing back. And what every time market is retracing back, market is going back to it to trace back to either original major zone or a minor zone to go and pick up liquidity that are there and then drop down. So the trend, when you know the trend, is it uptrend, downtrend, then is it consolidating? Now, the area of consolidation is the most dangerous place to trade, but it is also the most one of the places that can give you the most profits, because area that consolidates are where most of the profits are, because the bank and financial institutions are, it is these areas that they are accumulating their what now, their orders. This is the area where they are accumulating their orders. And the moment they are able to accumulate all their orders, then they move in the direction they want to move in. Okay, then they move in the direction they want to move in. Okay, so now for me now, what I'm waiting for now is the market to get to this point. This zone. Why? Because this is a major zone. There's a bit of consolidation there. There's a rally, it's a base drop, rally base drop. We'll get to that part. Then I'm waiting for it to get to this point, and then I go and look for an entry. Anytime this market enters any of these zones, then I go and look for an entry somewhere around there. I think I did something like that on gold. Something that was happening like that on gold. And look at it now, it has been selling. It entered this major zone for me, and then I'm still expecting it to sell more. At least I'm expecting it to sell more to this region, So for me on the time frame I use, because I'm not a swing trader, I'm an intraday trader, and then I scalp sometimes. What I do is to look for major zones on my forward time frame. So let's go into time frame analysis straight away. Sorry guys, I'm going to end this call now. It's getting too long, and then we'll send you another link. But I believe you understand what I explained about your trend. You need to know your trend. Are you on an uptrend or downtrend? Don't mistake your trend for retracement. Trend is where is the market direction heading towards? Because now this is obviously an upward trend. This is obviously an upward trend, okay? Because the market was around this area during the time we check it, does not make it that the market is a downtrend. Market wasn't a downtrend at this point. It was just making a retracement down, because market will never move straight down in a straight line, making a retracement down. So you must be able to see that, okay, this market is still going up. It is making swing highs and swing low, making a swing high here, making a swing low here, making a swing high, what you call your higher highs and higher lows, making swing highs here, and then making swing lows. So this, when you see it here now, know that it is still going, it is still in an upward direction, or maybe it's coming down. So you must see where's the direction of the market. And for you to know, how do you know that market is still going in an upward direction? How do you know? How do you notice? Now, one of the things you need to pay attention is areas, we call them IRP. They are institutional reference points. How do you know that? See, the market does not just react. The market reacts to something. The market reacts to something. You understand? Every time there is a reaction, I don't know if that is true in physics. I don't know if that is physics or chemistry. There must be something. Something must happen before there must be a reaction. Something must happen. Something must be responsible. There must be a foundation for it. There must be a root for it. You understand? So sometimes all these things can help you to know where to enter and where to exit your trade, because wherever the market is having an exhaustion, because markets move from point A to point B. point A to point B. So when it originates, so what you need to do is to look for the origin of the movement of the zone. You need to understand you find the origin of the zone, and then it has moved. All you need to do is to wait for the market to come back to that origin again, to come and test that origin, and then you take your own buy entry and flow with it, except it breaks it. If it doesn't break it, you flow with it and target the next zone again, the next available zone. I'm going to show us what zones looks like in the market. So I'm going to stop this now. Then we talk about time frame analysis, and then we move into I'm going to send another link, and then we move in.
Sir, please. I just joined like 5 minutes ago. I don't know if you can recap, or was it the structure that you've been treating since? I don't know if you could please kindly recap.
I will do a little bit of recap in the next video.
Okay, thank you kindly.
All right, you're welcome.
Well, however, the meeting is recorded, so you can always have it even after.
Yes, though I'm using this class for my private for Go Learning's Forex class, though. So I may not release the recording out.
Oh, okay.
How do I stop this thing now?